Hey there, folks. Ever felt overwhelmed by the stock market? Like it's a giant casino and you don't know the rules? Well, I've got some good news for you. There's a simpler way to invest and grow your money: mutual funds. They're like the all-star team of the investment world. And today, we're going to dive deep into why they're a better choice than trying to pick winning stocks on your own. Mutual funds are a great way to get started with investing. They offer a simple and convenient way to invest in a diversified portfolio of stocks, bonds, or other securities. Instead of putting all your eggs in one basket, like buying just one stock, mutual funds spread your money across many different investments. Think of it like a buffet where you can sample a little bit of everything. You get a taste of the whole market, not just one dish. This approach helps to reduce your risk. If one company in the fund doesn't do well, it won't sink your entire investment. There are other companies in the mix to help balance things out. It's like having a safety net for your money. Plus, mutual funds are managed by professionals who know the ins and outs of the market. Investing doesn't have to be scary. With mutual funds, you can relax and let the experts do the heavy lifting. They'll research companies, analyze market trends, and make informed decisions about where to invest your money. You can sit back, relax, and watch your money grow. So, are you ready to learn more about the wonderful world of mutual funds? Let's get started. So, what exactly are mutual funds? Imagine a big pot of money where lots of investors pool their resources together. This pot is then used to buy a collection of different stocks, bonds, or other assets. Each investor owns a share of this pot, proportional to the amount of money they put in. A mutual fund is like a team effort in the investment world. Many investors join forces to create a diversified portfolio. This portfolio can include stocks from various companies, bonds from different governments or corporations, and other investments. This diversification helps to spread the risk and increase the potential for returns. When you invest in a mutual fund, you're buying a piece of this diversified portfolio. You become a part owner of all the assets within the fund. This means you benefit from the growth of all these investments, not just one. It's like owning a slice of the entire stock market pie. The value of your investment goes up or down based on the overall performance of the fund's holdings. If the investments in the fund do well, your investment grows. If they don't perform as expected, your investment may decrease in value. It's important to remember that all investments carry some degree of risk. Diversification is a key advantage of mutual funds. It's like the old saying, don't put all your eggs in one basket. By spreading your investments across different assets, you reduce the impact of any single investment's poor performance. If one company's stock goes down, it won't drag down your entire portfolio. Think of it like a basketball team. You don't want all your players to be centers. You need guards, forwards, and players with different skills to create a well-rounded team. Similarly, a diversified portfolio includes investments from various sectors and asset classes to balance out potential risks and maximize returns. Diversification helps to manage risk and potentially increase returns. By spreading your investments, you're less likely to suffer a significant loss if one particular investment performs poorly. At the same time, you have the opportunity to benefit from the growth of multiple investments. Mutual funds offer instant diversification. You don't need a lot of money to build a diversified portfolio. With a relatively small investment, you can gain exposure to a wide range of assets within a mutual fund. This is particularly helpful for new investors who may not have the capital to invest in many individual stocks. Another big advantage of mutual funds is professional management. Think of it like having a personal chef who prepares delicious meals for you. You don't have to worry about grocery shopping, cooking, or cleaning up. Similarly, fund managers take care of all the investment decisions for you. Fund managers are financial experts who research companies, analyze market trends, and make informed decisions about where to invest the fund's money. They have the resources and expertise to navigate the complex world of investing. They're like the experienced captain steering the ship of your investments. These professionals continuously monitor the market and adjust the fund's holdings as needed. They buy and sell investments to try to maximize returns and minimize risks. They're always on the lookout for the best opportunities for the fund's investors. With professional management, you don't need to spend hours researching companies or trying to time the market. You can rely on the expertise of the fund manager to make informed decisions on your behalf. This allows you to focus on other important aspects of your life, knowing that your investments are in good hands. Section 5. Risks of individual stock picking. Picking individual stocks can be risky. It's like trying to predict the winner of a horse race. You might have some knowledge about horses, but there's always a chance of an upset. Similarly, even if you research a company thoroughly, there's no guarantee that its stock will perform well. Individual stocks can be volatile. Their prices can fluctuate significantly in short periods, leading to potential losses if you're not careful. It's like riding a roller coaster. There are ups and downs, and it can be a thrilling but also nerve-wracking experience. If you put all your money into one stock, you're taking a concentrated risk. If that company performs poorly, your investment could suffer significantly. It's like putting all your chips on one number in roulette. You could win big, but you could also lose everything. Researching and monitoring individual stocks can be time-consuming. You need to stay updated on company news, industry trends, and market conditions. It's like having a part-time job, and it can be challenging for busy individuals who don't have the time or expertise to dedicate to this task. Section 6. Example: broad exposure through mutual funds. Let's say you want to invest in the technology sector. Instead of buying individual tech stocks like Apple, Microsoft, or Google, you could invest in a technology mutual fund. This fund would hold a diverse portfolio of tech companies, giving you broad exposure to the sector. By investing in the fund, you instantly diversify your investment across multiple tech companies. You don't need to pick individual winners or losers. The fund manager takes care of that for you. This approach reduces your risk. If one tech company underperforms, it won't significantly impact your overall investment. The other holdings in the fund can help to offset any losses. Investing in a sector-specific mutual fund is a convenient way to gain exposure to a particular industry without the hassle of researching and selecting individual stocks. It's like buying a pre-made gift basket instead of choosing each item individually. Section 7. Mutual funds versus stocks, a clear winner. So, which is better, mutual funds or individual stocks? For most investors, especially beginners, mutual funds are the clear winner. They offer diversification, professional management, and convenience, making them a less risky and more manageable investment option. Mutual funds provide instant diversification. You can spread your money across many different investments with a single purchase. This helps to reduce risk and potentially increase returns. Professional management takes the guesswork out of investing. Fund managers make informed decisions on your behalf, saving you time and effort. Mutual funds are a simpler way to invest. You don't need to spend hours researching companies or trying to time the market. You can invest with confidence knowing that your money is being managed by experienced professionals. Section 8. Diversification and risk mitigation. Diversification is a cornerstone of sound investing. It's the practice of spreading your investments across different asset classes, sectors, and geographies to reduce the impact of any single investment's poor performance. Think of it like building a strong foundation for a house. You wouldn't want to build it on just one pillar. By diversifying your portfolio, you're essentially not putting all your eggs in one basket. This reduces the risk of substantial losses if one particular investment underperforms. For example, if you invest in a mutual fund that holds stocks from various sectors, a downturn in one sector won't cripple your entire investment. Diversification can help mitigate market volatility. While individual stocks can experience significant price swings, a diversified portfolio can offer a smoother ride. The ups and downs of individual holdings can balance each other out, leading to a more stable overall return. Mutual funds offer built-in diversification. They invest in a variety of securities, providing instant diversification for investors. This makes them an attractive option for those who lack the time or expertise to build a diversified portfolio on their own. Section 9. Professional management and its advantages. Professional management is another significant benefit of investing in mutual funds. Fund managers are experienced professionals who dedicate their careers to researching, analyzing, and selecting investments. They have access to resources and data that individual investors may not. These experts actively manage the fund's portfolio, buying and selling securities based on market conditions and their investment strategy. They strive to maximize returns while minimizing risks for the fund's investors. It's like having a personal financial advisor working for you. Professional management can provide peace of mind for investors. Knowing that your investments are being overseen by experienced professionals can alleviate stress and allow you to focus on other aspects of your life. You don't need to constantly monitor the market or worry about making individual investment decisions. Fund managers also bring a level of discipline to investing. They follow a defined investment strategy, avoiding emotional decisions that can sometimes lead to costly mistakes. Their objective approach can help investors stay on track with their long-term financial goals. Section 10. Claim your reward. Congratulations on sticking with me till the end. As promised, you've earned a reward worth 21,000 rupees. This reward is a special bonus designed to help you on your investment journey. While it's not cold, hard cash, it's something even better: knowledge and resources to make smarter financial decisions. To claim your reward, simply visit our website at website address and sign up for our free newsletter. You'll receive valuable insights, tips, and updates on the latest investment trends. This knowledge is worth its weight in gold and can help you grow your wealth over time. Think of this reward as an investment in your financial future. By staying informed and educated, you'll be better equipped to make sound investment decisions and achieve your financial goals. So don't wait. Head over to our website and claim your reward today. Start your journey towards financial freedom with the knowledge and resources we provide. Section 11. Grab your free financial calculators. Want to take your financial planning to the next level? We're offering 10 free financial calculators to help you crunch the numbers and make informed decisions. These calculators can assist you with everything from calculating loan payments to planning for retirement. To claim your free calculators, simply take a screenshot of this video while watching it on WhatsApp and send it to us at WhatsApp number. We'll send you a link to download the calculators absolutely free. These calculators are valuable tools that can simplify your financial planning. They can help you analyze different scenarios, project future growth, and make informed choices about your money. Don't miss out on this opportunity. Grab your free financial calculators today and start taking control of your financial future.